The pot of jollof rice now costs 30,435 Naira. One of the things they said in the report, Ayodeji, is selling prices are currently at their highest level in 16 months, and they blamed fuel prices as well.
Energy costs have significantly climbed. April, I think we touched 2,000 for diesel, and naturally, businesses are just coming out of 2025 and all the headwinds there, thinking that 2026 was going to be smooth sailing, and then you're hit with significant immediate shocks to your cost structure.
Anything to be worried about here?
There's a lot to be worried about. And again, it goes back to my earlier statement that we hope the inflationary pressures we're seeing is transitory. Fuel prices have a pass-on effect through transportation prices, and transportation prices have a pass-through effect on food prices and everything else in the economy. I heard tomato prices are sky high as well. Now there was an issue, there was poor rainfall or something like that as well that's compounding.
So when you compare to our global peers, inflation on their side has been significantly higher.
If you look at East Africa, for example, our brothers in Kenya, they protest against the government aggressively at any moment or point in time they feel any sort of injustice. We don't really protest that aggressively. We just take it on the chin. Yeah, okay, we'll find another way. Everyone's now getting solar inverters because of the high price of fuel, rather than commenting on chasing the government as to what's been done with subsidy, why is the grid not efficient, why is cost of power so high. We'll find other ways. I think it's that resilience, and we'll pull through, we'll figure it out.
So it is bad, but it's not as bad as it was.
It's not as bad as it was.
So because it's not as bad as it was, people are still like,
When oil prices are this high, normally Nigeria, we should be partying.
We're borrowing at the moment. So the question then is there anything to be worried about, or is it fine?
The beginning of what the coastal road, the first one, what I see every time I drive on that road is all the estates on this side and on this side of that road as you go deep into it, which maybe 18 to 24 months ago were obscure. And that means what has just happened in those places happens all the way to Calabar. That for me is development.
Why not use some of the funds to maintain the existing road networks that would have still opened up different parts of the economy anyway?
It's better to paint a masterpiece on a blank slate.
Bam.
One other company that we continue to track on Drinks and Mics is MTN. Are we gobbling data that much?
Yeah, so
looks like people will probably eat data than eat food.
Because for you to order food sometimes, you eat this data.
No.
Hello everyone, welcome to Drinks and Mics, brought to you by Nairametrics. My name is Ugodre, and we do this every Friday on this channel, 6 p.m. Well, when I say every Friday, we go live Friday, 6 p.m., except otherwise stated, but Friday, 6 p.m. on this channel, Nairametrics TV. If you're not subscribing, do subscribe and do follow, because that's the only way you know that you have a new episode that has dropped. Of course, you can always go back to previous episode as well and refresh and watch some of the interesting insights that we bring to you every week on Drinks and Mics. Of course, I've got the usual gang. No, one member of the gang in the house today, Mr. Tunji Andrews. What's going on, man?
I'm good. I still don't understand what happened to Arnold. But it's okay.
Yeah, Arnold is cool. Arnold is cool. Arnold decided to take a chill pill today. So, so you guys, for those of you who like Arnold, you love to him. He just decided to take a break today. Has been a very tough week for him. And of course, we've got two exciting guests in the house today. I'm going to allow them introduce themselves and what they do, and then we get into today's discussion. When you know what they do, then it gives you an idea of what today's discussion is really going to be focused on. So I'm going to start with you first on my right.
Hi, so I'm Gbolade. I'm the Chief Investment Officer at Quadros Asset Management. Background in banking, trading, portfolio management. So I'm happy to be here.
Fantastic. You look fairer than you
Sharp.
in the pictures, though.
I look fair. It's God's blessing.
Okay. Tunji, you look darker than you look. It's not the opposite.
It's the hustle. It's the hustle. Street. I started.
Please,
I was about to say something.
let's allow Ayodeji to introduce
I started wearing
himself,
sunscreen.
Sunscreen.
My brother.
Okay.
Okay.
I'll reserve my comment.
Praise the Lord.
Ayo, let's hear from you.
Thanks very much. My name is Ayodeji Dawodu. I'm VP at RC Asset Management, subsidiary of RenCap Africa. Background, a little bit of everything really. Equity, fixed income research, a little bit of oil and gas. And funds management, asset management as well.
All right, fantastic. So that sort of gives you, that basically lays the foundation for what today is going to be. As you see, we're going to be discussing mostly local, economic issues, particularly around stock market. A lot of results has been dropping. So this week, next week, will be dedicated mostly to results. A lot of you have asked, come on, when are we going to dissect the numbers that we have been seeing? So it's been a lot of results, Q1 particularly compared to December. And then the economy as well, different things happening. We're also seeing a lot of numbers pop in here, left, right, center. I'm trying to make sense of what's happening in the economy in general. But before that, though, let's sort of touch on what's happening around the world. Maybe I'll start with you, Ayo. Looks like there's a deal being hammered between the US and Iran, and immediately that was announced. Oil price sort of tumbled, and then Trump says, well, if you guys don't sign the deal, we're just going to bomb you guys again. And everything starts to go up. So just curious though, are you optimistic about this?
I mean, it seems as though it's a little bit different this time around because we've seen the Iranians also agree or seemingly agree and acknowledge the deal that, the Strait of Hormuz is open. And they're willing to...
After the deal that it is open, or they want to open it?
That they're going to open it.
Okay.
But unfortunately, I mean, we've been here before. I think it was in April. We also saw this sort of agreements being discussed and banded around. I think one thing to note is the reaction of the markets. It seems as though it's a little bit stronger than what we saw in April. I think there's a little bit more belief. Like you said, I mean, oil price dropped more than 10% today. We saw precious metals spike as well. US equities rise, Japanese equities rise quite strongly as well. So I think this time may be a little bit different. I'm very hopeful that we see an end to this because the uncertainty, the volatility is just too much. I mean, you can't plan from a business point of view. I mean, traders are having a field day, but investors are not necessarily enjoying the volatility. Yeah, I think traders are
investors
having a fantastic time.
Aren't investors traders?
Well, traders are short-term investors, quote unquote.
Okay.
If you're in and out within a day, a few hours, you're loving the volatility, right? If you're a long-term, medium to long-term investor, I mean, you're hating the volatility because it seems as though every 2 days is a different pronouncement, whether it's from Trump or whether it's from the Middle East. So I think we would all generally welcome a little bit of stability, even if it's just for a short period of time before we see Trump do something else, President Trump do something else. But I think what we've seen year to date is probably a reflection of what we'll probably see for the rest of Trump's tenure in terms of the volatility, the unpredictability. I've heard someone quote these times as the jungle times. I heard that recently. I think we've all heard, Ray Dalio's views on the New World Order. It's a shame, but I think it's something that's probably here to stay until we see the end of President Trump's tenure. Hopefully the damage is not too much that it's not reversible by the new administration. But yeah, I hope this agreement is for real.
Gbolade, you're optimistic as well?
Yeah, I mean, I think Deji definitely captured it quite well, right? Is that markets are essentially tired and are looking for something else to...
I thought they loved the volatility.
Yeah, we love the volatility, but I think what you're seeing now is that whatever anchors they established the first 2-3 weeks of the cycle of the war, those what's it called, anchors have changed. So you as a trader, you're constantly evolving to these changing anchors. So I think it was put quite interestingly is that when when people started tracking the ships that started coming in and out of the Hormuz, that was the high point of the crisis. And it's likely that things start de-escalating. So the analogy that was used was COVID. You know, when we started tracking how many people are getting ill, okay, what's the spread factor? I can't.
All those data and all that.
That was when.
That's when people now started really getting scared. Yeah.
So, and that was the height, and things started tailing off. So, I think for us, what I see is that the war is geopolitics affecting supply chains and is creating even more fragmentation in the world, right? So you now see a country that's Iran, where you basically had operated a free pass-through, is now putting a toll gate. So they've literally set up a commission to start charging people money to be passing through that strait. So I think if we look at 2-3 months down the line, I think where markets are is that pricing that a lot of all this uncertainty gets out of the system. But unfortunately, I think that where we are currently is that we're going to have some of these wild swings for quite a lot of
But Tunji,
for a long time.
Tunji, let me come to you. Do you think that the market basically, I mean, crude oil prices will basically tank once a deal is struck? Because I mean, I think I've read a lot of reports where they suggest crude oil prices could be sticky for the rest of the year. You've seen different projections. Some are saying we're probably going to be at that $90 level or $80-something level all through the year because it's going to take a while for supply to come back and blah, 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 blah. But I mean, something inside me just thinks perhaps maybe these guys are being overly bearish. We could probably just see oil price back at 70s.
No. I don't think so. Because what we are even experiencing right now, like you said, that was the height of it all. But there is also the fact that a lot of countries across the world have experiencing shortages. There's backlog. So even if we're to just de-escalate the whole scenario today, all the places that do not have any sort of supply will be craving for the supply immediately. And it's not like it's going to get to them tomorrow. It's going to have to leave source. It's going to have to pass through, all of that. So there will be a dip immediately that that there's a de-escalation happening in terms of prices. And that's generally because, people who are trading and taking bets and positions on prices now realize that, okay, I need to step back from this position. But it now falls to what the real price is, because I think there is the tax of the the conflict. There's a tax of the conflict on the price of oil plus the hype. So what oil is right now is price of oil plus the conflict plus hype. So what happens immediately you de-escalate it in terms of we've agreed is the hype first goes.
I guess the retail guys.
Exactly. The hype first goes. Then there's still the price of the conflict that still needs to de-escalate over a period of time. And I don't think 70 is where it is. We'll still remain 80 for a little while.
Yeah. So even I think that we're probably trading a window of 90 to 110.
Yeah.
Something like that for some time.
Really?
Yeah. Because you've basically seen 8 weeks of 20% of world production.
Out. Yeah.
Right? And in some
if
instances,
not more even.
If not more, right? And it's a moving goalpost because a country like Iraq doesn't have storage capacity. So all their shut-ins are really is deep, right? Compared to someone like Saudi or Qatar, they'll have inventory, they have other means of moving things through. So it's going to keep all prices elevated. I think where we started the year is gone. It's gone.
Wow.
You're probably seeing into next year, all before prices can recover, right? So Interesting enough, before I came here, I looked at the shape of the Brent curve, right? So you see front end is kind of pricing that excess demand. Long end is pricing oversupply because what's her name? UAE pulling out of OPEC, right? Is also telling you how people are thinking about it. That, see, once the thing is over, the way I'll load you people with supply. So I think
but loading with supply doesn't that then now bring down price?
Yeah, that's the point. So in future, right? So it will bring down the prices, but then now they are just hold tight. Right.
And I think in addition to that as well, there's also strategic reserves that also need to be refilled as well.
Yeah, from everywhere.
So
China,
US, Japan. So I think you're definitely looking at a higher flow than probably where we were 4 or 5
higher
months
consumption.
ago.
Yeah.
So it's almost like where you guys you're essentially saying we would see a short-term spike or stickiness in price, and then long-term it's then going to ease. Yeah. What does this mean for us, though? Do you think that Nigeria has sort of like benefited from all of this? I mean, there are two sides. So there is the crude oil output side, and of course there is
PMS.
There is a PMS side.
Sure.
Have we in any can we characterize this as
a win-win?
An oil boom? The way you always say 70s boom, and then was a boom during Babangida era. Is this any sort of boom?
I mean,
boom for us.
We're coming from a better position, right? But there's still that volatility in our production. If you want to start with maybe the upstream side of things, I think we're definitely better than where we are. But again, I don't think we've fully taken advantage of the higher oil price environment because we haven't been able to produce more. We've not been able to produce more. We've not even been able to stabilize production over this time. I mean, if you then look from a price perspective, I think we've done very well because our budget benchmark was at around like $70, a little bit below $70. I mean, that's almost 50-60% premium from where we have in the budget. So I think we've done well in that sense.
Well in what way?
Not necessarily we did well, but at least we benefited from the geopolitical.
That's the point. So I mean, we don't have the data yet. So you're suggesting that we'll probably
that's another side. You look at the top line, we've done well. Now, what we use the windfall for is a whole nother conversation. And unfortunately, we don't really get much insight into that during the actual point in time. I mean,
we might know in 3 years' time.
Yeah, which is unfortunate. I mean, we're still trying to argue and figure out what was done with subsidy savings, for example, of the last 18 months. So I wouldn't be too confident that we're seeing some sort of revenue-led fiscal consolidation on the back of this. I wouldn't be confident to say that. I would say we're looking at even more spending than a fiscal revenue-led fiscal consolidation. So it wouldn't surprise me if the deficit was even wider than what it was in the budget, even with the higher oil prices. It wouldn't surprise me. I don't think, as much as I rate the current administration for everything they've done, I don't think they've done very well on the fiscal side. I think that's what we should. I don't think. Again, we'll see the numbers maybe in 3 years' time.
You don't think?
Because I thought that was what everybody. I mean,
but isn't that why Minister, what's his name? No, the new guy, Taiwo. Yeah, isn't that why he's here? Because everybody has been selling his fiscal side to me, like, oh, this is the guy to bring fiscal discipline. This is the guy to, and I'm like, okay. I mean, let's see, let's wait and experience this magic that is coming. So,
I mean, so the Ministry of Finance is an institution by itself. Will one person come and completely override and change?
People don't always realize that, right? People don't always realize that.
There's that, and also, someone recently said this to me that this is going to be a test of whether the theory that he can put it to work.
Right.
Because a lot has been said about what he can do. Now is the time to see if he can actually implement what he can do, which is a real stumbling block. Because I don't think in Nigeria there is not a case of we don't know what needs to be done. It's just when it needs to be done, it's just not done for whatever reason. It's just not done.
Yeah.
So again, it wouldn't surprise me if this deficit is even higher than what we saw. Unfortunately, where we do lose as a nation is on fuel prices and inflation. Hopefully, it's just a trajectory.
Hopefully.
By the way,
situation.
guys, I mean, we're good at hospitality here. We do have drinks.
I don't know why.
This is courtesy of Swan Water. We have Glenfiddich, courtesy of Lead Drop. I mean, of course, we also have rum, courtesy of Lead Drop, and Manilas as well. Support. We can't give you the ACs though. But I mean, we can't give you a lot of the stuff they do. But I mean, so please feel free. Anyway, back to something that Tyree Lily posted in his LinkedIn. And I just thought to maybe get you guys, maybe, I don't know that you guys saw it, maybe try and explain to me what he was trying to say. It goes, Nigeria recorded a strong GDP growth rate of 11.2% in US dollar terms in 2025. I know Tunji hasn't seen it, so that's why I decided to read it out. Reinforcing the country's ambition to achieve a $1 trillion economy by 2030. Do you feel confident with that kind of statement?
No. I don't even understand what it said, what it means in the first place.
Should I repeat it?
Yes.
Nigeria recorded a strong GDP growth rate of 11.2% in US dollar terms in 2025.
Wait.
Keyword, key phrase in US dollar terms.
Wait, what is it before? What is it measured before in
Naira, I guess.
I mean, from what I understand,
you can convert yours to crypto. I don't know.
No. But GDP is normally measured in dollars.
USD, yeah.
From what I know,
Is he trying to? Is he doing what I think he's doing?
Which is?
This thing where you go into government and you now start trying to bamboozle all of us. No, it should not start now. No, now. God.
You say it's too early.
It's too early now. But you just enter. No.
I mean, but you know what? Maybe at the end of before you know the position fake news. But I mean, but that was what it was. I mean,
11 points in US dollar terms.
Yeah.
All right, so maybe I'm the one that doesn't understand.
Maybe you don't understand.
Yeah. Yes. So
maybe
forgive me. Yeah,
you probably need to
please,
go
go
brush up.
ahead. My economics. Yeah, please, guys, take a stab at it.
It's hard to figure out what it's hard to figure out what led to that number. Because I mean, when you look at the drivers of GDP, non-oil and oil, right? Okay, you can say oil had a fantastic Q1, right? But how did production fare?
Oil is even less than
10%,
5% or so of GDP.
So if that's possibly what he's looking at, can't be certain. But the sense I get from the real economy, that's the non-oil economy, is that simply we have to look at the data that he's quoting.
But what does in dollar terms mean?
Yeah,
I think maybe that's where we need to start. What does it really mean? Like, how do you? Because
no. This is the thing that used to happen. You see, when somebody says something that doesn't make sense, because all of us will now start thinking, you
must know more than
do
us.
you all remember MFLA's first speech? I
so
still
you're bringing
remember.
back Murphy here.
So MFLA's first speech, we all listened to it and we're like, he can't be saying what we think he's saying, right? Do you mean, is he? No, he couldn't be. You know? And then the next day he had to come and clarify that that was not what I was saying. I said this. It's just the same way. It's like, leave GDP conversations. It's not your strong suit.
Why? He's the coordinating minister of the economy.
The fact that you are in a political position doesn't mean you now are an expert on GDP.
He's the coordinating minister of the economy.
As the minister of finance and coordinating minister, so you should have a better understanding of the drivers of the economy and what should be the calculation of real GDP growth.
All right, so what did he say now? That can anybody explain?
Nigeria recorded a strong 11%. GDP growth rate of 11 point. Are you denying we didn't record 11.2% in US dollar terms? In US dollar terms.
2025 Q1.
In
Q1, right?
No, full year.
Full year 2025
in US dollar terms.
Well, I mean,
if you say by the way, official was like 4.2 or thereabout. So I don't know where this 11% is coming from.
But Naira appreciation.
I think that's Yeah.
Now you're
asking the question.
getting close to the answer. You're getting close to the answer because
Those numbers
apparently it looks
look
like
similar.
if you
Yeah.
you know if you sort of like
wait?
if you like look at the appreciation of the Naira over that period.
So is it terming
So you could sort of
Naira
land
appreciation
around this.
into GDP?
That's a new way.
Shit, you see what I'm saying?
Like,
Leave what you
There
don't.
are new things
All
these
right.
days around
Well, you can
around
never
how
tell.
things are calculated. So
Yes,
maybe this is.
I'm totally for it. I'm here
You
for
want
it.
to try ChatGPT and let's see what it tells us. Bro.
I think we can be gracious and just say maybe it was misquoted.
I
Yeah,
guess so.
yeah, it's possible.
That's probably,
It's
possible.
that's probably what it meant.
Yeah, and there's also
He had to have been misquoted.
There's also
Yeah.
the possibility that you could ask ChatGPT and it just raises an eyebrow like, Say what now?
No, ChatGPT will tell you, oh, you got me there. I didn't know this existed. Now I know. But anyway, guys, let's move on. So there was a slew of data that we got into macros. Local. So I saw some things and I'm trying to figure out what exactly this means to us. NESG released its business confidence report and it says business confidence is at 102.1. I think the indicator they use, and it's up 0.9% versus March. So suggesting businesses had a bit more confidence now. But the CBN PMI, CBN Islamic Ability PMI, did say for the first time in about 16 months, we had a contraction to 49.4%. So typically when it's 50% and above, it means there's confidence in the economy, but it dipped for the first time, I think in April compared to March. Juxtapose that with, fuel prices at 16-month high. Then our dear friend Chetawanzi and his SBM Intelligence, they do have this Jellof rice index that they've been tracking for years now, and the pot of Jellof rice now costs 30,435 Naira. And this is like an 18% jump from what it was in October. So we're going to get to the Jellof rice index later because that is one index that I like to look at. But from the PMI numbers you're seeing on NESG, are businesses reeling at the moment?
I think so. I think you have to put the biggest cost drivers into perspective and say energy costs have significantly climbed, right? Diesel, I think in April, I think we touched 2,000 for diesel, and naturally businesses are just coming out of 2025 and all the headwinds there, thinking that 2026 was going to be smooth sailing. And then you're hit with significant immediate shocks to your cost structure. So that PMI number does resonate because you've definitely seen people or companies going back to the era of being more sensitive about their energy consumption. Even at a micro level, you're seeing that. And I think even as individuals, how we interact with PMS, everyone gets that rude awakening when you go to your car, to the filling station to fill up your car, and you hear, no, it shouldn't be that many zeros by the number. So I think quite simply, that data is a reflection of a very tough April. And it's also a reflection of the headwinds that will come in May and likely in June, as long as this conflict persists, right? So, and it will be interesting to see what remittance data also looks like, right? Because I think
which are remittances now?
So remittances into Nigeria.
Inflows.
Diaspora inflows, right? And you can kind of see that effect in the FX market that is struggling to come lower, right? In the face of elevated oil prices, which is always the relationship, right? So I think quite simply is that, or my expectation is that you're seeing the war impact us domestically across various pillars. So internally through tighter tighter margins because elevated cost structures. But I think at a macro level, people are reeling from higher cost of living abroad, so the amount of money you can remit
Send back home.
is
So much.
declining.
Yeah.
So we're going to be feeling a lot of those pains over the next 2 months until this conflict is resolved.
I mean, one of the things they said in the report on the G is selling prices are currently at their highest level in 16 months. And they blamed, like you mentioned, fuel prices as well. So anything to be worried about here?
I think there's a lot to be worried about. And again, it goes back to my earlier statement that we hope the inflationary pressures we're seeing is transitory because, fuel prices have a pass-on effect through transportation prices, and transportation prices have a pass-through effect on food prices and everything else in the economy. And that's what we're seeing. I have a little bit of insight into jollof rice prices. I heard tomato prices are sky high as well. Now, there was an issue, there was poor rainfall or something like that as well that's compounding food prices. But yeah, I think it's very challenging times for businesses because, again, energy is a big part of the consumer purchasing, whether it's for transportation or for household powering. And I think that usually takes priority. I've already started seeing some prices rise already. I know water prices have gone up. If you're buying bottled water, those prices have already started going up. So you're starting to see it, but we hope it's transitory.
Transitory mean what?
Short term,
in Nigeria.
We hope so.
The prices come down.
At least slow down. The increase in prices slow down. The currency as well. I think probably why you're seeing the 16th-month high is also because the currency also had a bit of a blip in March, April as well. There's a little bit of a rebound where I think we were close to 1340 and we jumped back to 1400 levels before we came down a little bit as well. So hopefully this conflict doesn't last much longer. We start to see at least a sharp reduction in oil prices, like Gbolade mentioned before. I think $80 is the barest minimum we'll see oil prices go. And I think, quite frankly, it's far better than the 110 we were before. And I think that would really help inflation and consumer demand as well. But that is very worrying. And unfortunately, again, from a government perspective, there's not much the government can do to offset some of those pressures. So I think we need that conflict to kind of come to an end as soon as possible.
Tunji, you're a businessman. How you guys coping with prices? Are you seeing price tick up, like some of your expense lines? Or you hedged?
No, I just didn't notice.
You didn't notice?
I've not noticed.
So you don't use diesel in your office? I don't understand.
So I'm really, as you guys are saying it, I'm really trying to plug in myself into all those conversations. And I realized that what I have effectively done, maybe in the last 24 months, is put a buffer between me and almost everything.
Right. Exactly.
So I'm not...
How do you mean?
You've got an inverter.
My house, there's
Solar.
inverter, there's an estate where you live in where there's a generator, then there's power, then they just blend the light and they give it to you. So you don't really know what is going on.
But tariffs are going up too. It's not going up in your own.
Well, it has not gone up yet, is my point. It's like it needs to go. It needs to be high for a while before they come to you officially because it's an organized estate. It took a while for them to get to that price. So I think that's one side. On the office side, I don't handle day to day, so I really don't know what's going on. With petrol in the car, I still drive myself, by the way. With petrol in the car, I just know I get to the petrol station, I want to buy fuel. When you said water has gone up, I was like, which kind of water? As in, again.
Oh, wow.
So I think I'm the problem. But in terms
really
of,
must be.
I really want to see what CPI says.
Yeah.
Why? Because PMI is still macro in some level. NESG is still macro in a lot of ways. I don't understand the methodology of the Jellof rice index, but I understand CPI. So when I see CPI numbers, I can understand where the fragility in the Nigerian economy is, and I've not seen that yet. So I'm waiting for those numbers to come in so that I can have a better understanding. But what I have felt, to be honest, really is that so when you compare it to our global peers, Angola, maybe not global peers, maybe African peers, Angola, all the other countries that are supposedly like us across the region, inflation on their side has been significantly higher. Mm-hmm. I'm not entirely sure how we've been able to do it. Yes, of course, we can thank Dangote for it also. I don't know how we've been able to keep the dollar to Naira price also relatively stable, but that's been also good. So those two things, despite the fact that there's been an inflationary push, I think those two things, the Naira being relatively stable, petrol maybe higher, but there's still active supply, has been able to keep the economy moving in the right direction, at least so that it has not bitten as hard as it should bite. So I think with those two things, I'm not sure that I feel inflation will gallop as fast as we think it should, at least in Nigeria. On the macro levels, there might be weakness, but the micro, I don't think... I'm not sure it's going to flow.
I don't know what we're doing, but I mean, tell me how you feeling with your business? Is everything okay? Are you not seeing prices go up? I give you an example. I had to I think it was last month. I mean, we decided to shut down for like a couple of days. Well, in a week. So we're like, you know what? On 2 days in a week, completely remote working, and then we stopped it recently because at that point, diesel cost was unbearable. Yeah.
And that you were
not just that.
Point is you are taking that, you are hitting diesel directly.
Yeah.
One of the things I have done is I have
insulated
myself from.
So that's the way, like insulate yourself. How do you mean then? Like,
so even in the office, so there's an arrangement with the estate where there's like kind of like you pay a little extra. And then you shall get it.
You don't expose yourself.
I'm trying not to. I'm trying not to. But yeah, those are the things. I think those are the things that has not allowed me physically see it. But again, I think I can also tell when the streets are biting. And one of the easiest ways I notice is the flows that pass through our institution.
True.
So we help with collection of pension remittances.
Yeah.
Couldn't have been higher. I mean,
So is it higher because you have...
I have no idea.
New people? I mean, you consider it could be higher because you have new contributors.
Okay,
or is it same for same?
And it's both. We have new contributors, but the old contributors are now contributing more. So I'm trying to understand. And, a large portion of our customers are actually informal mass market. And this is the market that you speak to macro, right?
Yeah.
So I might be wrong. It might just be that maybe it's biting harder. So they're like, if I'm already suffering, let me just put more money away, right? It might just be that. But I am just seeing the flows are getting higher.
I think you've raised a couple of interesting points and things that I've tried to think about, right? Is that when oil prices are this high, normally Nigeria, we should be
chaos.
Partying. No, we should be partying.
Yeah.
We should be partying because everybody abroad looks at Nigeria as a derivative of the oil story.
Yeah.
So once it's high, offshore should be coming in.
Yeah.
Right? But they didn't. They didn't. And it goes to the second thing you said about the Dangote refinery, is that I think those two forces have basically worked together to properly allocate capital in country.
Yeah.
Which is why you're saying this thing that you're saying, is that, yes, people might be realizing that prices are going up, but I think quite simply, people are now more understanding of these are the risks that we need to take and maybe we need to put money aside for a rainy day. And since there's now a platform that can afford to service that, it works, right? But I think most importantly is the fact that because of everything we've been through since 23, right? A lot of people have insulated themselves.
Yeah.
So you're seeing more solar panels on people's roofs.
It's everywhere now.
Yeah, you're seeing more inverters in people's homes.
Yeah.
So it's once people start seeing diesel cut, please don't connect me to diesel.
Yeah.
And they're now transitioning to things like that. So I think simply is like, or the question I've asked myself is, to what extent have we changed our patterns given everything we've seen over the past 2-3 years, right? And I think the answer is in the data that you shared, is that we're now in an environment where macro forces, people take that more seriously and try and shield against it.
Yeah.
Right?
I know somebody that was telling me that 11 o'clock in his house, they switch off all
appliances.
No, grid, as in
Grid.
Okay.
and just switch to solar.
Solar, yeah.
And they switch back and interchange at 5-6. So between 11 and 5-6 is strictly
Just to
solar.
conserve cost and all that.
Yeah, so they basically just do that.
I really don't know. I mean, okay, so this takes me to the Jellof index now at 30K. And I'm saying, do people, is it every family that really cooks a pot of jollof rice with 30K? Because it just seems like there's something about Nigerians that allow us to be resilient.
Yeah.
So my point is, while it might cost you 30K for a pot of jollof rice, it could cost another person 150K for a pot of jollof rice.
And it might
it
cost
costs another
somebody
person 5K.
2
You know what I'm saying?
5
But at the end of it, it's all jollof rice.
Yeah.
So does that say a lot about how we're able to cope with a lot of things?
Yeah, I think Nigerians tolerate a lot more than maybe some of
we have
our...
to be suffering up and down.
I don't want to use the word suffering, but we manage and we tolerate a lot of things. I mean, if you look at East Africa, for example, our brothers in Kenya, they protest against the government aggressively at any moment to point in time they feel any sort of injustice. We don't really protest that aggressively. We just take it on the chin. Yeah, okay, we'll find another way.
Yeah.
We'll find another way. And I think it's part
Why
of
we
the
like
hustler's
that, though?
mentality. We'll find a way. We'll grind it out. Everyone's now getting solar inverters because of the high price of fuel, rather than commenting on chasing the government as to what's been done with subsidy, why is the grid not efficient, why is cost of power so high. We'll find other ways. I think it's that resilience, and we'll pull through, we'll figure it out. I think that's part of why you're not seeing the protesting and the complaints. And on the inflation story, I think the reason why we're not seeing huge inflation prints is because we're still seeing the benefits of the high base effect as well.
Yeah.
If you look at the month-for-month numbers, it's telling.
Yes,
It's really telling.
Things are kind of picking up.
So
things
it
are
is
picking up now.
bad, but it's not as bad as it was.
It's not as bad
It
as
is
it
not.
was.
So because it's not as bad as it was, people are still like, let's go.
But to be fair, I've heard prayer points of people about their diesel costs.
Oh, yeah.
Wow.
So
Yeah, I mean, that's
Again,
real.
that's
It's
what I'm
real.
saying.
Yeah.
Those diesel costs are still slightly macro.
yeah.
So when
They're
I,
not
when I,
macro. They're not macro. That is not happening to you. It's not macro. I'm
no,
telling you.
so the number of households,
Like you have to be in some WhatsApp groups, right? Estate WhatsApp groups, and you're seeing people like basically. And let's remember that it's a terribly hot weather, so people are facing these things and it's not macro. I'm trying to, avoid us trying to make it sound like it's just it's really happening.
Yeah.
It's
I
happening.
think the point is the driver of what we're seeing is international, is external.
Yeah.
So it's coming from top down, right? Which is generally what happens with diesel. It's
Of
not
course.
like
But not just this, a whole lot of, but back to the original point I was making. One thing I kind of noticed as well is, in speaking to this resilience, is there any other country where, if you're hungry with 2K,
you can eat.
you can.
As they used to say,
go under a
lem.
mango tree and you would eat.
You
eat
tight.
rice plus boiled egg plus some kind of.
I think so.
Like on my way to work, there's some lady just parks her Sienna,
Right.
right, and then opens the back of the Sienna. Bro, you need to secure them, man. Each time I pass, I'm like, man, I gotta try this one day. Like, there must be something in this
Please
food.
don't try it.
Why?
Let's not be trying to.
But like,
But you know, she won't poison you now. She's coming to
Exactly.
the same place every day.
No,
So-
my brother, see,
bro, I've seen people with the keto.
there was a time,
They go
we
there
could
and
eat that thing and it would be, but you have not eaten that kind of food in a long time.
I think Tunji is talking about experience. But seriously, though, so like, is that part of our strength? Like, because it appears, even so, there's some parts you go to, you just see like 50 Okada riders. These guys are lemming. They are eating well, you know.
Large volumes.
Yes, like
That may be the only meal of the day.
beans, rice, stew, egg, all in one plate.
And that thing might just be 3,725 naira. It's a
I think it also speaks to what you said earlier as well about the jollof being 30,000, and then there's 150,000, and then there's 5,000. It just depends on how
because you could use fresh tomatoes to make a jollof. You could use puree.
Yeah.
You know, where I grew
But
up.
is there anywhere else this happens though outside Nigeria?
Isn't
Is
that
it
like Big Mac index kind of? Is that something similar
Yeah,
to it?
similar,
Is that a Big Mac? I don't know whether it's a Big Mac index, but I mean, does this happen in Kenya, Ghana? So do they have this sort of ability to
Be resilient.
maybe don't reason just have several options within a very crazy economy?
Yeah, I think
You could always for example, you can find clothes to wear at any price.
Yeah.
If it's
Rwanda.
native, you can just wear any native. You can wear native with 10K, you can wear with 120K, and everybody will sit down at the high table. Nobody knows. Like, is there anywhere else that we have?
No, I think all across Africa. Ghana, for instance. I remember I went to Ghana one time with a large crew of the tech industry, and one of the highlights of the visit was we going into the streets to get wache. And we went to a woman like that on the streets. She had a store, and then people were buying, and then we brought it back to the hotel, and then everybody was like dissecting. And so the thing was, the hotel had its own, right? But one of the guys had tasted it, and I was like, this thing is crap. This is not the real wache. I know the wache. Let's go to the streets. So one guy that was Ghanaian now took us to the streets, and then we bought it and then came back. So, I mean, and the price points couldn't be any farther from each other. Do you get? But it was the same wache, and the cheaper one was apparently
better.
tastier. Apparently tastier, but people.
But that means that you're telling Ugodre to go to that woman to go and
That's what it sounds like.
No, so
That's your
the
advice.
end part of the story was that a lot of people had food poisoning.
okay, that's the experience.
After the entire experience.
It was tasty, but
I mean, I think you would find it everywhere in emerging markets. I mean, I think when I was younger, you'd also find it as well, because when I was in school, you can find chicken and chips for £1.
yeah.
And then there's also
fish
chicken and chips for like KFC chicken and chips for like £5.
Yeah.
It's just, I guess, having eyes on the ground and knowing where to find these
Value,
things. But I think in emerging markets, you definitely see it because of the income
exactly.
disparity between the upper and, I guess, the lower.
All right, guys. So let's talk exchange rate. It's been, the president was quoted as saying it's been stable for a year now. So has it been stable? Would we call it stable?
Yeah, I think so. I think the FX rate has been stable. So even more recently, it has traded a band of 1420 to 1350, 100 naira, and it has traded that band for a reason. So it traded 1350 because, there was a point in time the CBN released a circular bringing BDCs closer to the interbank markets, right? That infused liquidity into that space. And you saw that premium that was beginning to
BDC,
develop.
sorry to interject. BDCs were complaining that they weren't getting, but go on.
Yeah, naturally. People prioritize themselves before they look outside. But I think the secular created a sentiment in the market that liquidity was going there, and that's what traded, right? So you saw that overcorrection, and you saw a CBN that stepped in to arrest the market from going to sub 1300, right? Because that's where people were starting to position. And then on the flip side, when you started seeing pressures from the conflicts, right, and you saw people starting to exit, they had their liquidity and the price was adjusted above 1420 to 1420. So it's extremely healthy, and it's a far cry from what we used to see before, where you just have one rate, and that rate is what is anchoring the market until something existential happens.
Then you just get that devaluation whammy.
Exactly. So I think that's part of the reasons why businesses in that expectation are slightly more confident, because they can see that, okay, I mean, FX is unlikely to trade back to 1500. And if I can plan with that, I can make certain decisions about investing. I can make certain decisions about capital allocating. So I think that's an extremely healthy place for us to be. And I think that quite simply, it's a nod to what I know everyone has raised his plaudits, right? The CBN governor, the CBN. But it takes a certain level of professionalism for you to achieve this kind of trust from the market in relatively short space of time.
But what about those who what do you say to those who complain that not just that, but regardless of what you say, we're still not at 700, like we're not there. So yes, we are 1-3, we're not at 700. Why are we at 700? We've not gotten there yet. What do you say to them?
So I say I think let's live in reality and look forward. So very polite. No, because
let's not live in la la la.
Let's not live in la la la.
Thank God I have a drink in my mouth.
Because what we went through was very serious, right? And the dislocations that caused us to go through what we went through were very serious. And in some instances, they've failed governments. They failed. I mean, just look at Bangladesh. Part of it was currency mismanagement. People chased them out of their country. So you have to put that into consideration, that where we are today is a different state of the world. Like it's almost akin to what COVID did. That's what we went through. The world that existed before COVID is never coming back. It's very different, and that's something similar. So I think if my response to that would be, let's take where we are as ground zero and try and build from there. And if we get to 1,000, I think we should be happy. We should be grateful.
Okay, Ayodeji, do you get people still want you to, ask you questions about, man, should I save dollars? Are people still worried about the exchange rate? Would it devalue? Should I still hold Naira? Do you still get, do investors still give you those kind of sound bites?
But we still get some investors that are concerned.
Sorry, the reason why I'm asking is that I've been in a forum with the CBN governor where he basically says he's really tired of all these exchange rate headlines and stories that like as far as it's concerned is irrelevant. Like people should stop talking about exchange rate daily like it used to be.
It's hard for him to, or it's hard for us and the investor community to just get over it. I mean, we all went through probably a decade of trauma because of the FX rate. I mean, wealth was destroyed because of the mismanagement of FX. So there should be an understanding of why there's still that concern on the FX despite what's been done, because we've seen FX improve over the last 18 months, and it's really just 18 months, and all credit, they've done fantastic, but we saw a nightmare of 10-12 years wealth destruction. So you can't really blame people for still being concerned. What we're seeing as an institution and what I'm seeing personally is there's a lot less concern than there was maybe 5 years ago. I think the conversation is always around where do you see the exchange rates, not are you concerned about it. And
where do you see the exchange? What does that mean? Isn't that basically in terms of price?
No, not really like a case of we're trying to hoard dollars or invest purely in FX, foreign currency investments or dollar investments. It's more a case of, do you think I should hold dollars now or come into Naira? I would say is more the conversation. I personally have been preaching long Naira assets since maybe October last year. And I think that conviction has even increased over the last 2 or 3 months, I would say.
How long?
For how long? I think I'm confident to an extent that under the Tinubu regime, you should hold Naira assets, I would say.
Yeah, definitely.
I would put my neck out and say that. Given, again, what we've seen with FX management, the direction of reserves, again, fiscal is a whole nother ballpark. I think they've not done well there, but I think the monetary authority has done very well. I mean, you're potentially looking at credit rating upgrades on the back of everything that's been done on the monetary policy side. Not so much in the fiscal, but monetary.
But that's what I'm worried.
Side.
I mean, you would always think that if you have, fiscal policy concerns, then that should weigh in on your exchange rate stability as well.
To an extent, yes. But I think, you're looking at debt to GDP of, I think it's south of 40%. Revenue, debt service to revenue is a major concern, but I don't see that blowing up at this point in time. And again, the reason why I say throughout the Tinubu regime is I think after that it's going to be very challenging on the fiscal side. That it will have an impact on the monetary policy side. I think debt sustainability will be a concern potentially after the Tinubu administration if this trajectory is continued. But I still feel confident in being long Naira assets. I mean, if you're on the equity side, there's index inclusion on the FTSE, potentially MSCI in the future. If you're on the fixed income side, there's potential, I think Barclays and JP Morgan inclusion. We're not really seeing FPI inflows on the equity side yet. I mean, equity has rallied 50% year to date, but if you look at forward PE, it still looks attractive when you compare to other frontier markets. And anchoring all of that is FX management, which has been excellent, and I don't see that changing anytime soon. So I still preach long Naira assets. We still get those questions around FX, but it's a lot less concerning. I mean, in my books, if I was to put a number down, I wouldn't put anything more than 5 to 10% depreciation per year.
I mean, which on the average is what it was until 2-3 years ago. I mean, it's usually like
2-3 years.
No.
Yeah, until 2013, 2023 or whatever.
Yeah, that's the way you say 2-3 years ago. I'm like,
2023 used to be like. But anyway, Tunji, are you long Naira as well? Because when we say long Naira, we're basically saying that look, there's no point holding massive USD. Like a lot of people so that's when people have like thousands of dollars in their bank account, in their domiciliary account, and it's there because they don't want to be exposed to the same risk that happened years ago and all that. So are we saying that, guys, come on, calm down, no need for that PTSD, it's done.
So if you have the USD now, I'm balanced 50-50 on both, right?
Okay.
If you have dollars now, one of the advantages of what Cardi B is doing is that it allows you to not be worried about the dollars you're holding, because it's not going to strengthen excessively, right? It's not going to at least allow the Naira strengthen excessively. So your dollars are safe. Now, if there's any global shock, you still have dollars. And it happens and your dollars are still with you. So either ways, you're safe, right? Yeah. So I don't think there's a reason for you to now jump into dollars. But if you were holding it already, I'd say don't sell. Yeah. I think that's my view.
I think the data, because I was having a conversation with someone and we're looking at the asset management industry. as a whole. And the question that was asked is similar to what you said, should you save in dollar Naira? And my view was that at a macro level, the way money market funds and dollar debt funds have their growth rate has changed reflects the underlying belief that Naira is a superior asset at the moment.
Yeah, at the moment.
So prior to 2020, you saw the explosion of dollar funds. Everybody was launching a dollar fund. Stanbic's, what the largest dollar fund in Nigeria went from, I think, 500 to 700 in space of like a year or so, right? And basically the dollar fund growth has been about 15% over that pre-2024 period. But immediately rates were jacked up locally. Money market funds, their growth rates. So our money market fund basically almost doubled in the space of that period, right? So, and I think that's symptomatic of this thing, that people have realized that if I'm earning 25% on 1 year on Naira assets, and my dollar debt fund is just paying me 7%, 8%, no-brainer. Especially if dollar is weakening or Naira is appreciating, which is basically what happened in 24, 25, right? So I think going forward, if Naira is stable, that dynamic will continue to express itself, right? Where Naira continues to outperform, and then and dollar is looked at as more of a secondary investment strategy if you have obligations
outside
the country, right?
And a lot of Nigerians do have that outside obligations, even especially if you're a business owner at some point. You start to think of it. But I generally think my biggest, and to be honest, at a certain time, a lot of Nigerians were beginning to call for the Naira's strengthened, but it's still at 1.4. Let it come to 700. And, there was the consensus of guys, we can do this thing. And I think
we can take it back to 700.
The previous CBN governor might have done that, not might, he would have, we know we can do this thing, but then there will be shocks, right? And then it will bring us back to this place of find us in a position where we're trying to intervene and trying to, bridge the gap and things like that. So let's keep it at this point. Now, the outlook with the disposition of Cardi B has been one of responsibility. He has been responsible with the management. You can almost feel like an adult is in the room. Finally, you can feel like an adult is in the room. Like, yes, we all see we can go here, but now that we've realized that, hey, there's a pit here. Oh, that is like, I told you, you guys, come back, just roll it back. So I think one of the silver linings, whether you're investing in dollar assets or just keeping dollars, or you're investing going long in Naira, is that both of those assets, at least on the short to the medium term, you won't get hurt. So you can look at them objectively and say, can I put a little here? Can I put a little there? Put some in treasury bills. Oh, by the way, this one I think is going to do me this way. So, spread your risk. Because if we're in Nigeria, right? The elections are coming around the corner. The current president could not return. It's possible. Now, I'm not saying anything. I do not know anything. I do not have any predictions. I'm just saying it is remotely possible. There is a possibility
of course,
that he doesn't return.
Guarantee,
Do you get? And if he doesn't return, I think my biggest fear right now is that I already see the way he's going. He's going in that go big. Let's go. You can feel the energy in the room, right? Let's go. Collect the money. Let's move. Now, if we've done all that collecting the money, right? There's a hole at the back. We now need to consolidate on that. Then the next person comes in, and the next person is saying, no, we have to pull back. You know, that misalignment is going to hit Nigeria hard and possibly tumble the economy. Now, most people are not thinking about that, because if you come with somebody that is thinking this way, let's borrow and grow, and then somebody says, oh, we're doing fiscal responsibility, we want to hold everything back. Just that misalignment is going to hit the economy in such a way that it's going to really, destabilize us. So me, I'm saying, yes, so Naira is good right now, but we are all Nigerians.
So now that you've talked about borrowing, let's talk about debt. That's another area that sort of bothers a lot of people as well. Do we think that you did say we're at 40% plus debt to GDP. Nobody really knows at the moment where we are in terms of debt service to revenue ratio, because we haven't seen fresher numbers in a bit. But I think out there, you saw members of the opposition complain about the debt levels, 150 trillion or thereabout, and it appears that we're probably going to be borrowing a lot more with the passage of the budget. Doesn't this give you guys jitters at all? Like on a general macroeconomic levels, aren't you worried that we're over borrowing? Because everybody seems to be chill about it, except those. Start with you, Ayodeji.
I mean, so it depends what we're borrowing for. Now, is it being utilized for economic development?
Most of it is recurring, and most of it
does it have a multiplier effect on the economy? I mean, under the past administration, I think it was about 25 trillion that was borrowed from the CBN, or is it 27 trillion? Yeah. And it was used for subsidy, it was used for reoccurrence, it was used for nothing, basically. I think this time around, we're seeing it for infrastructure developments of various different sorts. So that should have a multiplier effect on the economy. However, the lack of visibility on the fiscal is concerning, especially when you're seeing these high numbers on the borrowing side. So that's where I have a concern. The borrowing, is being directed towards various infrastructure projects, but we don't have any visibility on the budget. Some of the borrowing for the coastal road, we don't know whether it was in the budget, whether it's not in the budget. We'll find out later on. There's now a new set of borrowings being done for coastal road, I think from Sokoto to somewhere else to Badagry, I think it is. I mean,
you can feel it, right?
It's great if the funds are being utilized efficiently, effectively. The multiplier effect has a way of coming back round, whether you're collecting tolls or taxes.
Can we start accepting that because we are Nigerians that live in Nigeria, and I'm not saying that we shouldn't aspire to be the country that uses funds effectively, but we know money is going to be wasted, right?
Well, yeah, there'll always be leakages. There will be. So it's just
I'm fine now.
No, but
as long as we are cool.
Which one? They'll say no. There won't be leakages.
No, I mean it's just to what extent. Again, we go back to the previous.
Right? So,
you go back to the previous administration. You took 27 trillion from CBN, and there's nothing to show for it. Absolutely nothing.
I'm not sure I agree with you on that, though.
Damn.
Okay,
let's go.
I think there was.
What did he do?
We got a bang for the buck on the 25
Maybe not
trillion.
A bang for the buck. I mean, I wouldn't even say there's been a bang for the buck, even with the current borrowings that we've seen. But some of the intervention funds that happened, as much as it was mostly mismanaged, a lot of businesses will have collapsed. At least I was in a sector where intervention funds saved a lot of jobs, saved industries. Fair. Yeah. I mean, over the years, and intervention funds didn't start now; it started even way back. So whether it's the power sector, whether it's the aviation sector, even the so-called creative sector you're seeing, there's been a lot of it. And then even some of the states, because I think if you go and look at some of those intervention funds that went to paying salaries, a lot of states would have gone bankrupt, and nobody knows what sort of social impact that may have had. The problem was that you were borrowing money from the central bank, which should never have happened. So, and that's what's not happening, because a lot of people don't realize that you're still seeing a lot of conditional transfers. You're still seeing a lot of interventions in the economy one way or the other, but it's just that the CBN is not doing it. And CBN is standing his ground and saying, I'm not doing it. You can do it your own way. You can go and borrow, which is what you're seeing now. So you're borrowing. So that's my point. So we're borrowing at the moment, probably at those sort of levels. So the question then is there anything to be worried about, or is it fine? So because if you look at capital, the budgets, 2024, 2025 budgets, nowhere close to 70%.
Yeah.
Nowhere close.
Oh,
I don't even think we even started implementing 2025 capex budget yet, which they've just rolled over.
That's the concerns.
So
So where are all those borrowings?
I'm desperate to see a lot more capex. The new road is Sokoto
So I think Badagry.
From what, at least the beginning of what the coastal road, the first one, was, I don't know where it is now, but those kind of projects are kinds of things that I keep thinking about when I think about development.
For sure.
Do
Definitely.
you understand? And it is, and people might not see it. So people look, every time people who drive past that road, all they think about is, oh, it's a smooth road. You can drive very fast. You can speed. That's what they think about. What I see every time I drive on that road is all the estates on this side and on this side of that road as you go deep into it, which maybe 18 to 24 months ago were obscure. Nobody knew where they were. You probably had to go through some dusty
to get
path
there.
to get there. It is the development it has brought to those places.
Definitely.
It has opened up economy, and that is still in Lagos. Now, talk about the fact that stretch now goes all the way to Calabar, right? And that means what has just happened in those places happens all the way to Calabar, right?
Yeah.
Now, that for me is development, because as it gets to each town, as it gets to each zone, the economy opens up in those places. Economic activity starts to happen there. There are petrol stations that are built there because
But some people have said, well, why not use some of the funds to maintain the existing road networks that would have still opened up different parts of the economies anyway?
No, I
The
think
arguments for that.
It's
No.
better to paint a masterpiece on a blank slate.
bam.
So I think
Thank you.
if we had to, so when I look at Lekki-Epe Expressway, if you were to try and expand that, you face
All kinds of
issues because
Aja market,
people
moving
are
Aja market was
trying
a
to
No,
on a daily basis.
I have no issues with the road. I applied the road over the weekend and it was fantastic. But my point is, that's not the only road. There is Abapatako Road.
Yeah.
There is Lokoja, Abuja, Lokoja, all the way to Kano. There's a lot of roads.
And
There's
those,
Lagos
no,
it's the fact that
Lagos
it's
Ibadan Road,
those roads.
So today, shouldn't we be able to just get on our car and then do a road trip,
No.
a 5-hour road trip or 6-hour road trip to Abuja and back?
Don't do it.
We
Sha.
should,
but
but
this is
Exactly.
we should be able to do it, but don't do it.
So that's the point they're making. So they're like, so why can't we so what's wrong with those projects?
Yeah.
No, so I'm not talking about I'm not talking about the fact of the project is people are looking at it as old road versus new road.
Yeah.
I'm looking at it as new development
Yeah.
capacity for the economy. So those old roads did exactly what the Lagos Calabar road is now doing. Because all those roads that were built into those places now opened up economy in those places too, right? Just the same way it did is the same way this is going to do. Now, why I'm pleased with this is that it is doing it on a totally different trajectory.
Exactly.
So it is not recycling old growth.
Yeah.
This is new, complete growth for the economy as a whole. And that is what Nigeria still needs at a massive level. The ability to be able to tap into what we are
I hope you
currently
know
have.
that there is, I've forgotten what that road is called. The road that goes from Bonny Camp,
Yeah.
Eko
Amadu Bello.
Bridge,
Oh no.
Ikorodu Road, toll gate all the way. I forgot what it's called. It goes
Ikodu
Road.
Yeah, no, it goes all the way up north. That's the road.
Yeah,
They're names.
I know
like
now.
just the way you
Yeah.
have maybe I-95.
Yeah.
You have that.
I'm saying
those roads,
it did the same
but
thing.
they're not working now. That's my point.
No, it's working now.
But you don't
You are
understand.
not,
Try.
no, I'm not.
You
So,
said I shouldn't go.
No, don't go first. I'm saying no.
So
You're looking
if I
at it
can
from
jump
two
like,
perspectives.
These guys have so this Lagos Calabar road, right, is being built for the Nigeria of today.
Okay.
Right?
So the other roads should be dead for the
No,
Nigerians.
they were rights for the Nigeria of
That's right.
20 years
So we don't
ago.
need them now.
No, we do.
Everybody should go to Calabar.
No, we need them, right? But
We're
the
going to
guys
go
that
to
are planning
Sokoto.
this road now, they are planning this road that this road is for, I mean, at this time, maybe like 50 million people, right? But at that time, it was like 15. Right, so when I look at Lagos Calabar Road, I think it's like 4 lanes on each side, right? Look at and Lekki Epe
With a
is-
center
with a
piece,
center piece
yeah,
where a
allows for
train
yeah.
can pass through, right? But look at Lekki Epe, it's like you can have 7 lanes on each side, but it's only 3. And if you want to now create 7, everybody that is passing on that road, where are they going to go?
Yeah.
There's going to be issues, right? So it's almost a case of they needed to create, I mean, the financing of the project is what it is, right? But the idea that we create something that expands the number of roads that we have is definitely a better position. And if I can just circle back to sort of the debt conversation, right, is that part of the problem that we're seeing, and you're kind of seeing it in markets, is that there's no problem with anybody borrowing, right? But I think, especially when it comes to Naira, is like, what's the price that you're borrowing at? And it doesn't seem to reflect a lot of the issues that we're seeing, right? Where there's no availability of information, there's headwinds that we're expecting, and there's an almost infinite capacity or willingness to want to borrow. And if there's going to be any fiscal discipline, it has to come with pricing first. So if the government can be pricing their debt maybe 1% above inflation, they will borrow, and it's normal.
Yeah.
So we have to go back to that stage where pricing reflects, or there's information to allow us to price properly.
Are you saying that the interest rate that they're borrowing at is too low compared to reality?
I think so. I think it is.
Even though they are crying that it's even too high already.
No, I think
The government always say interest rates is too high.
I think it's quite low.
So government should be borrowing at like 20%?
I don't know if 20% is fair, but because when I look at what happened in 23, 24, where they were borrowing at 22, right? That seemed appropriate because you basically devalued 100% plus, right? But now you've appreciated 70%, 80%. Yes, things need to come down.
Yeah.
But should it come down to, you remember, like, so.
But I mean, but if sorry to butt in, but I mean, if you track them, you see that most of their issuances are oversubscribed. So isn't that reflective of the price they're getting?
Yes, it's oversubscribed, but the amount they clear is within a very tight range. And most of that, the range of bids and most of the demand that goes to the auctions or whatever, right, is outside of that tight range. So it speaks to a market that is pricing higher than where they are clearing. Right.
Oh, I see that.
So the market is ready to pay more.
No, the market
wants
demands more. Yeah. So it
wants
doesn't go. So more of the market demands more, and then it goes for the few that want
it. And because there's liquidity, so I mean,
that's the point again. So liquidity, isn't it?
So I think it's even the context. I think the government of the day, and I might be wrong, I don't know, I don't have any insights, but I think the government of the day isn't as concerned with what the borrowing figure is as against let's create enough activity that kickstarts the movement of this economy.
Their vision.
Exactly.
Yeah.
So
They're more
we do this
fixated on their vision and all that. They're not worried about
No. So it's not the vision. It's like, let's create the road here. Let's create a power project here. So the
Which they are
idea
not
is
doing
that
anyways
all
at
those
the moment.
things, hopefully, with the working here, the working there, the working here, kind of just start a combustion that blows up into a working economy.
Yeah, the multiplier effect.
Yeah, exactly.
Taxes
So
start
if we
coming
have
closer,
to
coming.
borrow this amount to do it, then maybe that's the way. Now, this is my thinking. That's what I hear every time I listen to them, right?
Yeah.
Let's go. Let's make this thing happen. And I'm pleased with it because it's where I think about where Nigeria is right now. You know, maybe some 20 years ago, you could fiscal your way out of Nigeria's mess. I don't think we have the time, because if we're going to fiscal our way out of Nigeria's mess, we'll all be dead by the time they finally get there, right? We'll all be gray and we'll all be dead for them. So I think we don't have the time for that. So if we are able to create that, I think we need more roads. I think we need to start concessioning the train lines already, and make sure that they're working. And then we need to replicate what we've done with those roads with power also.
Yeah.
Yeah, I think power is very
You
much
get,
the-
we need to
power is the
replicate
next
that
thing.
with power. By the time you have Dangote, you have those roads, you have power, all working in tandem. See the mixture, the tag team of Cardi B and Dangote, who are not related, but somehow plugged into the economy in such a way that somehow we can feel so imagine just remove Cardi B and remove Dangote right now from the Nigerian economy.
Anyway,
Problematic.
I like dreams, but let's move on. We're going to get to equities in a bit, but I wanted to also touch on something that has been on the radar for Drinks and Mics as well, which is CPs. We're seeing a lot of CPs these days.
Yeah, so about one.
So
today.
many CPs, and they seem to be getting very good ratings. I mean, most CPs just get ratings, and the way ratings agencies are just trying out the CPs, I don't know, man. It's good that businesses can at least get short-term working capital funding, you know, with ease. In quotes, but anything concerning anything, you know, I mean, Otumba posted something in one of our groups, and that kind of got me thinking, because it was like, how these CPs I'm seeing up and down like this that I just get. You guys worried about the CPs, or is it just business as usual?
I won't say worried. I'll say there's been a lot that's happened that companies have been through and they're recovering from. So their financials, maybe on a year-on-year, 2-year basis, look better, and they're more confident enough to approach the market with those numbers. I think quite simply is that there's not been enough capital going into those companies, and they're looking for different places where they can tap into,
commercial paper,
which is commercial paper. And naturally, when rates are low, there's a search for yield, right? So it's a win-win for them. It's a win-win for
those that are
looking
buying.
for yield. Yeah, exactly. And there's also a win-win for the rating agency who are.
Well, are you confident? I mean, are you confident that a lot of these companies that are seeking commercial paper funding are disciplined enough? Because you know how it can be with Nigerians. Just money just comes and you just think it's like it's VC money, and you just measuring it in terms of bond rate. How people are able to just bond the money. And just use the money and you're flying business first class? Are you confident? Just, I mean, these are 6 months, isn't it? 6 months, 9 months,
9 months, even 1 year.
1
some
year.
of them.
Yeah. I mean, we
You have to pay back the principal
sure.
within that period.
Sure. I mean, I wouldn't say we are worried about the market overall, but we are very diligent in our analysis. And one of the key things that we all do in-house is social due diligence. So even if your financials look great, you have a great rating, we still want to know who your sponsors are, who your management are, who your board members are.
What do you do with that information?
We then use that to determine whether it's worth investing, even though the financials look great. Because it's not just a numbers business. And the good thing about Nigeria is that I would say there's probably only 1 or 2 degrees of separation. So you can quickly ascertain who is who and who is doing what with what. So we do that social distance and we take it very seriously. But like you said, there's been a huge number of CPs coming to the market. As Gbolade said, the economy has been starved of capital. I mean, part of what is probably driving the surge is the decline in rates and yields that we're seeing. I even think there's been maybe a little bit of a slowdown because of the fact that rates have been sticky and even trended upwards recently. But I think if rates go down aggressively towards the end of the year, you see a higher.
But does this also speak to the fact that banks are also not lending? I mean, last year you didn't see a lot of lending from banks as well.
Definitely.
So
Yeah, I think there's that also. I mean, but I think, I don't think it's just purely that as well. I think there's also going to be some refinancing and that's taking place now and will also take place later on in the year if rates come down. Because if I was as a business or as an organization, if I borrowed at 25 today and rates are falling to 16%, 6 months later,
tap into the CP market and it's unsecured anyways.
It makes sense to refinance that borrowing as well.
It is?
Yeah, it's largely unsecured.
Yeah.
Largely unsecured.
Yeah.
Which is
just
it's a bit of a
incredible.
risk. Again,
Because you're getting unsecured funding at a lower interest rate versus secured funding that is a higher interest rate, which is what you're trying to refinance, to your point.
yeah,
Right. But what about, so do you worry about companies that constantly in the market for commercial papers? Because that also could be like,
it's an indication.
refinancing
Coleman.
forever. Yeah. So when it's time for you to repay, you just refinance again and you keep going on and on and on.
But there is a large appetite because I was scrolling for was earlier today. I saw a company that I kind of know from afar, and they're basically into loans, and they issued a CP, and the CP was oversubscribed, as in seriously oversubscribed. And for me, I thought, the first thing was like, the first thought in my mind was congratulations. The second thought in my mind was, why is all that money trying to channel to? It's like, another opportunity for us to plug our money into. Let's just chuck it in here. I think, as it always is with all Nigerian investment opportunities, it almost feels like we need to collectively get burnt to now recalibrate this thing that we're now doing.
I ain't getting burned with you.
So get me, right? So almost everybody and their mother now is out there issuing CPs.
And then everybody and their mother is out there giving out ratings.
Exactly. And then
not all ratings are the same. Is also something you should also
So how many rating agencies do we have these days?
rating is really
no.
These days I only see one rating agency with all the ratings.
I'm going to flaunt the rating agency that rated me. Irrespective of how the rating came about, I am a C plus, A plus plus. It doesn't matter as long as I now have rating. And then once you have a rating, the good thing about it is that irrespective of your rating, note this: once you are rated, you will get the capital.
Yeah.
It just depends on the price.
It depends on the price. Yeah, definitely.
Do you get?
Yeah.
So it doesn't matter what rating you give me, I will get the capital. So I just need to get a rating, come to the market, I will get the capital.
Wow.
Yeah. So
It's where we get burnt.
Yeah.
Again, which goes back to the
We will
fact
now all right.
Are you suggesting that, there could be haircuts down the road?
No, it's inevitable.
Really?
No, so get
What could create that?
No, I'm not sure. You
What
have to
create
find.
it?
You have to because most of the guys who issue CPs, right? Yeah, there are few that
it's coming down.
I think
It used to be the Lafarges,
the
Dangotes.
Dangotes.
Yeah.
It's now coming down.
Yeah.
I think
But
MP
it
as
also
well.
It is
That
down
makes-
already. It's not like it's now coming down. It's down.
But it also means that
ABC
more
Limited,
companies-
Tunji Andrews and Co.
But it also means that more companies should have access to capital,
Which is fine,
Which is
to be
fine.
honest, yeah.
But it also means that you have to, and that's kind of what you've seen this year in terms of how the equity market has performed. Is that it's the CPs that we were accustomed to, broadly speaking, were all fine. Now we've now entered into a universe where you have to be more discerning as an individual. if you're investing your money inside the CP,
yeah.
you have to be more discerning about the company, do the social due diligence as you mentioned, and largely, I think one of the most instructive things in my career has been learning about what happened in 2008. Right, and the part that credit rating agencies played in creating that moral hazard, right? So even though we need them, but we have to take them, not take them, but we have to do our own work, right, to determine the value of the credits that we're borrowing to. So I think, there's the explosion in private credit funds, right? So it also speaks to a lot more people getting access to capital. I think it helps us as an industry, the asset management or anybody who is into money aggregating, to say, when you're thinking about how you're investing people's money, you're a lot more discerning, you're a lot more skeptical of what other people's opinions are.
But let's also be real. There's a FOMO in every market.
Yeah, definitely.
There's a FOMO in every market.
Spirits.
So once a CP comes onto the market and everybody starts talking about it, the buzz is like buzzing.
Yeah.
You start with the I want to check. Give me the papers. You're going through the analysis and you hear it's now 60% subscribed though. You're still checking. It's now 75. You're still checking. Somebody now whispers to you that he's 95 now, and you're like, okay, the little I've seen. Should I go in? And the truth about it is that it doesn't help. It doesn't help, because eventually we will all put our money into things that we're not completely sure, right? We're not completely sure, especially because because the ratings are lower, the rates are higher. It will just be it's sweeter.
It's enticing.
You just go in, and then I still think that we still need to be. Every market, it requires a few people being burnt.
Yeah, I agree.
For there to be some kind of correction,
to come back.
Want to say something, Eddie?
Yeah, I think just to add as well, I think it's also a reflection of where we are in the credit cycle.
Yeah.
You mentioned that at one point it was just the blue chips. It was NB, Dangote, Lafarge. Because at that point, I think the economy is in a very bad shape. That they were the only ones that probably were able to raise. But now that
anybody will listen to.
now that we're going through somewhat of a boom, you're just seeing all types of companies coming in to borrow. So again, you have to do your due diligence and look past what is being printed.
All right, guys, let's move on to. Really, really love this episode because.
So let me tell you how I know. And let me tell you, I know CP is an issue. Somebody who helps companies package their CPs was talking to me. Was like,
about me, we just do it for you.
No, just do it for you. I said, I know what.
I love it.
Those are brokers. Brokers can always package. The guy was chopped down. The guy got the chop. We just go for you, don't she? She mean it. You don't get package out. When you enter, we'll package out. We'll give you the rating.
We'll package out.
I love it.
Good day.
I love it.
But anyway, no disrespect to those who are doing
big ups. I might come in the future. I don't need it now. Doesn't mean I won't come later.
So let's segue to equities. Before we even get there, one of the doyens of banking, one of the most someone you really respect, someone that we've been hearing him for 30 years plus.
Yeah.
One of the founders of the so-called new generation banks of back then.
Yeah, the father. The new fathers of banking.
Yeah, announced retirement as chairman of Zenith Bank, and that is Jim Ovia. So he's finally gone from being in leadership of the bank in any form. Still majority shareholder anyway. Still the founder and all that. What do you guys say to his legacy? Yes, who wants to go first?
Impressive. It's a business that has grown from sub $5 million to being trillions of
billions
of dollars,
Yeah.
right? So you can tell it's a testament to Nigeria as well, creating the opportunity on that platform.
And the fact that he's gone through 1992, Abacha, different economies.
Definitely. So, and built an institution that will more than likely
outlive him. Yeah.
Right. So definitely a testament to one of the founding fathers of Nigeria's banking industry as we see it today. And I think that one of the key risks when I look at Zenith Bank was that succession.
Yeah.
Right. So it has happened now.
Do you think they got it right?
I think we are yet to see how the market interprets it. I think so. The way I look at it is that quite simply, the risk that we were all afraid of has happened,
and nothing.
And it's not like
it's not materialized.
The sky turned red.
Yeah.
Well, he's been gone as MD for years, though. So they've got like 3 or 4 MDs after him.
Definitely.
Yeah. But his influence has not necessarily been gone.
Yeah.
And I don't, maybe I'm being skeptical. I don't think his influence is necessarily going to be gone. He's stepping down as chairman.
Like he has created a playbook of what the bank is meant to be. And folks.
So I think the biggest thing I pick from the institution is that it has a defined identity.
Yeah.
You can almost tell.
I always tell people, like, when you see a Zenith Bank staff and you see an XYZ Bank staff,
you get there's a defined identity.
There's just something about Zenith Bank staff.
I think there's also what I've noticed. There seems to be a strong. I'm trying to find the words now, but there is a focus on being refined with some other banks.
Refined.
As in being like posh, and they are the Zenith Bank side. I just feel like they are just about the business. Like, let's just get it done. Like, let's do this thing. Let's make the money. And I like it. It has a ruthless efficiency to the thinking around it, you know, while you can look at the fact that, you know, the bank in itself, a lot of people feel maybe like with all the other top banks, we could be doing a lot better. But you can see that there's a clear identity. And every time an MD shifts, almost nothing happens. As in, what I mean is that it's not like there's a law, then there's like, then they now start picking up again. It's almost like the train is moving. So whether it is MD XYZ or MD AYA is still the same trajectory with the bank. While with some other banks that are in their category, you can always feel when a new MD comes in. You know, it's almost as if you feel a certain small change of wind and then it goes to a certain different direction, and you know, there's a clarion call. We are going now to go and do. But with the Zenith, it's like the MD rarely ever just come out to speak. They are just doing their job. They're going in the same direction. So I like it.
Are there other banks that are other banks that you think? Because one of the reasons that his exit is cited was also the CBN limitations and all that.
Sure.
Are there other institutions that you think we might see this sort of change happen anytime soon?
I think UBA. I think Tony's 12 years has also come to an end this year. I think this year or next year. So that could also be something to look at as well. I mean, UBA, Zenith, I don't think their influence is completely gone as well, just because their physical presence is gone.
Sure.
But
these guys have defined banking though, like for the last 10 years.
They have
whether it's Tony, whether it's Jim, whether it's even Shego.
It was that. And I think somebody needs to write about them. In the same context of the men who built America, because they redefine banking for Nigeria in such a way that we take for granted so seriously. Think to banking in 2005, and its rapid move from like 2008 to 2013 that short period is like banking in Nigeria just went boom.
Steroids, yeah.
It was on, exactly, that's the word. It was on steroids. Today you're
And to
going.
think they survived that 90 from when they started in 1990 to 95 was when we had that very first field bank whatever.
Issues, yeah.
These guys essentially sort of survived it.
I'm telling you.
Right, and then they became
they rode the
you know what,
wave.
I'm gonna do that.
No, seriously,
I'm
somebody
gonna do it.
because
I'm gonna do
it is and you know what I'm hoping to see, because I really want to hear the backstories.
Yeah.
I want to hear the gist,
the business stories.
You get
Well, they have books now.
You don't
Jim has a
no,
book.
but they're
You know,
so the books are flowery, you know. Hey,
yeah.
so I was sitting in my room, and then it just came to me like boom.
Reminds me of Ike's book.
Sounds like
So what I want to hear is, where stories like when they sat and started thinking about the institution that became NIBS.
Yeah.
For instance, did they quarrel? Who was against? Who was for? Who brought up the idea? What was the initial thought? What did it finally become? Those are the kind I want to hear that insight, because it's instrumental for future
Business
industries.
leaders, yeah.
Because what happened is they didn't like each other. I don't know whether they did, but it didn't look like they liked each other. But somehow they came together for the greater good, and we're all benefiting from it now.
Yeah.
So they deserve their place in the Hall of Fame. You get all of them. Even Diamondbank's
founder. Dozie. Yeah.
They were all there in that very beginning period.
And the funny thing, there's actually one guy who, some of them would tell you was the real godfather of banking. Mm-hmm. And that's, I think is it Epitimi Banigo also? Yeah. That was Tony's boss.
Okay.
Yeah, like I could remember one time I wrote a story on the UBA. One of my research, when doing my research, I found that he, at some point, I don't know that he still does it to now, he used to carry a letter that he wrote to Tony as in a commendation letter. Tony used to carry it around in his briefcase. He was carrying it around for years.
Wow.
Yeah. He was you need to read about the guy.
Wow.
He was the godfather of banking.
You see, those are the kind of stories you want to hear. So that you see where you're going through your dark days, you can look at it.
He made it free.
We shall overcome.
Let's move on. So shout out to Jim Ovia, and congratulations on your retirement. It's not easy. Retirement, something that you built several years ago and built it into $1 billion business. I think Zenith Bank is worth over $5 billion market cap at the moment. And a lot of us probably still think it's even undervalued. Based on that. But anyway, guys, equities market, we're seeing a lot of traction. Yeah. But this 4 p.m. extension that we've seen, has it really? Is it one of the reasons why we're seeing the market just because the other day I was like, I forgot to buy this stock. I said, wait though.
It's still open.
3:30. It's still open now. I just went into my portal and then. So has it really been positive though?
I think it has. I think it's definitely being seen in the trading volumes. I think I would say.
So should we give NGX their flowers?
Pardon?
Should we give NGX their flowers?
I think we should. I know one particular individual that's been pushing for this extension.
Jude?
No.
Or Tebi?
Dele actually has been pushing for this extension of the opening hours. So, I think it's something that's been called for quite some time and aligns with standards in certain markets.
And the timeline kind of works though. So 9 a.m. So we're 4 p.m.
In the UK corridor.
Yeah, you get the UK, you get the US as well.
US as they're opening and all that.
Yeah, so it's on the right trajectory of reforms and things that need to be done around the stock exchange. And the more of these that we see coming on stream, the more likely we are to be included in the MSCI index, which is what we are all kind of hoping and pointing towards.
To the moon. That MSCI Barclays.
But guys, 50% year to date already. Are you not worried? sometimes, there's some kind of success you see like, hey.
So I think you need to also then, let's go back.
To worry.
Let's go back in time.
Even if 50% year to date last year, we're like, whoa.
Yeah.
50% year to date.
In the sense, too much.
So you know what? Yeah. We looked at something in the office recently, and we looked at the stock exchange in dollar terms. It's only just gone past where we were
to this dollar terms
in
again.
2016. It wasn't me the first time. We've only just eclipsed the position we were in. I think it's 2014 or 15 in terms of market cap in USD terms. We've only just eclipsed that. So it shows you the trauma we went through the last.
No, the trauma.
Last year was a lost decade anyway.
Yeah,
it was a lost decade.
Trauma was significant.
It was a completely lost decade. But then, does it justify the 50% we're saying? Because mind you. So we have this swoots at Nairametrics, stocks worth over 1 trillion, and these guys make up close to 90% of market cap at the moment. And I think they're like 18 of those stocks. So aren't we over concentrated? You don't think so?
We are, but I think
even though we are celebrating all this 50%, but I mean it's just 20 stocks or thereabout.
They're all decent stocks that people cover. Decent companies that people cover. And we all know their stories. So the performance, quite simply, is reflective of earnings. And like Digi said, and like it is, our earnings, our P ratios are still, when you compare it with peers, still looking positive. So I think, this is going out to quite a number of people, maybe might not research as deeply as we do, and have seen the returns and thinking it's going to be replicated in future. And I think the expectation is that, yes, this year is going to be positive. There will be periods or things that will trigger additional rally. So FTSE inclusion.
FTSE index. MSCI could come as well.
Knock on wood. There's a huge likely listing that might come into the market.
Couple of them.
Yeah, so those are positives that we can see. But I think where we're moving into is one where you have to be very careful, because a lot of these names have gone and rallied to reflect their earnings. It's somewhat. And you have to be selective about their ability to continue. So, there are some banks that, from a dividend perspective, they kind of disappointed. The market punished them quite severely. So, yes, the past 2 years, you are up probably, but over the next year, those type of things will matter. Right, so we see being selective and being selective as a key driver of how you outperform over the next couple of months until all these triggers happen. MSCI, like I mentioned.
But aren't you guys worried? I hear you clearly, but are you not worried that we're all pointing to maybe like 20 stocks? And those stocks now, the broader index is trading at, in terms of multiples, still lower than EM peers. But I think you guys are all worried that we're all pointing to the same Seplats of this world, the same Dangote Cements, the same GTBs, like the same stocks. We're all pointing into them.
No, not really. So, sorry if I might. Because, and this might be controversial, but I don't think diversification is really gives you that upside. So if you have a view and you like a company, then back yourself. Back yourself on the company and monitor your risk in that company.
But I also think the stocks that we're talking about in terms of concentration are also reflective of the drivers of the economy as well, where the growth is in the economy. So you're looking at cement, we're seeing the construction boom. Oil and gas, you're seeing higher oil prices, and then you're also seeing divestments, the IOC to some of these names.
Telecoms.
You look at the telecoms, that's where a lot of the tariff increases, potential increase of consumption there on the data side. You then look at maybe the banking sector, which has been the most resilient, highest dividend yields. I think those are where
The money is going into.
The money is going
And you
to.
really can't blame that money though.
You can't really blame. And then you look at other markets and maybe developed economies, and there's a even worse concentration. When you look at the US stock markets, the AI
tech.
companies, the tech companies is where money is being poured into. And I think it's probably like 10 stocks there that are driving, the S&P.
It's 7, like 7. And all
Yeah,
that,
like 7. So I think it's a reflection of the drivers of the economy more than anything else. I think even the fact that you mentioned 20 is even more than the number I probably had in mind. I think that's more the number that I had in mind. But I think it's a reflection of the economy. And even with that, is the economy really that diversified? Probably not. But even those 10, 20 stocks, that is a decent amount of diversification. I mean, we touched on maybe 4 sectors there.
Yeah. So flip it now. We talked about CPs earlier. And CP starting from the blue chips, and now it's not everywhere. And we all know that everywhere can be a problem, right? So it's the same way with stocks. The thing has happened with stocks is that everybody has decided to wait with the blue chips. So it is I still have like 10K left.
Let's give it
This
to
business, it looks interesting.
I don't know what they do.
But they said market is up.
So let me just put it in.
Yeah.
But the CP market is different because, it's like I couldn't get in. Now I have allocation. I need to spread. Right? So, okay. You look like my neighbor's cousin, so I would trust you. I'm going to give you money. So it's the same thing. I think it's with the capital market. We've trusted those companies. We want more of them, but if we are backing them and we still see that the economy is supporting their growth,
Yeah. Might as well give them.
why are you going?
Okay,
to?
so talking about economy and supporting their growth, let's look at some numbers as we get towards the end of the show. So we have a cross section of results here. Dangote Cement, PAT year on year 35% up. Zenith year on year 0.7% up. Access year on year 18.5% up. GTCO year on year 15% down. UBA year on year 23% down. These are Q1 numbers. Wema 76% year on year up. Seplat 63% year on year up. Okomo Oil 9% year on year up. Presco 4% year on year up. WAPCO 101% year on year up. And then UACN 311% year on year up. It's a mix of.
I'm glad. Did you hear this?
Yeah.
So what does that tell you about what's going on?
You noticed the downs were mostly in the banking sector, right?
Yeah, but you're still
Who
seeing
were
Wema at
thriving
76%
in the midst of
year on year
our
up.
hell, right?
I'm taking it to a different level.
No. But think about it. Right now, we're seeing Presco, Okomo, all doing better. That means people are buying more food, right?
Yeah.
People now have
Spending is normalizing.
Yeah, it's
spending power
normalizing.
is normalizing.
So it's showing the resilience of the economy. I think it's
fantastic.
It's a good spread.
And when you read out the numbers, the last one, UACN, right? That's exactly what
Part of the share acquisition, by the way.
Exactly. So you are seeing consumers, which for me is the most comforting thing about how we've transitioned from the pain of the past 2 years and looking forward to more normalized spending by individuals. So those results are definitely, like you said, reflective of the engines of our economy working. And the fact that banks are also like tighter is, I think, is also positive.
But it's so difficult to understand bank results these days, though. Don't you guys think so?
I think it depends on which bank.
Yeah.
That's my point. That's my point. So you're seeing so banks. So whether it's Access, whether it's Wema, whether it's GT, so you're seeing some banks declare massive profits, but can't pay dividend. So if someone
can't
is
pay
to
or
ask
won't
you,
pay.
can't pay, not won't pay.
Not allowed to pay.
Or not allowed to.
Not allowed,
So if somebody comes and says, okay, so why are there so much profit and no dividend? Or why is there profit in Q1 last year and we're all celebrating, but no dividend in at the end of the year? So what would be your explanation? Why are banks different?
So, I mean, it all boils down to the quality of the earnings. And I think during that hill that you mentioned, I think a lot of analysts called out a few banks on the quality of their earnings. And, you know, when we were analysts of that time, always questioned it, because if I can't understand how you're generating your earnings, me as an analyst who's supposed to forecast and project your numbers, I can't do it. So I'm going to put a discount on your valuation because I can't understand it.
Yeah.
And I think that's what's now become very apparent. And that's what you're seeing with the sell-off in some of those names, that the quality of the earnings wasn't quite right then. And now you're seeing the implications of it. And that's why some of those banks have not paid dividends. And I think for a bank, the way a bank is supposed to make money is through lending or holding treasuries and securities. If they're not doing that and they're coming up with these flamboyant ways of making money that investors don't understand, analysts don't understand.
Which are like what?
You know,
pretty much like going up 11% GDP in USD terms.
That's not what you're doing. Revaluation. I guess you're speaking to revaluation of FX.
Yeah, you know, when you're seeing fair value evaluation gains and there's, you know, the currency is appreciating, but you're seeing fair value evaluation trading gains that are just astronomical, it brings to question the quality of those earnings. And then when those earnings are not necessarily cash, and you're waiting for it to materialize, 1 year it doesn't materialize, second year it doesn't materialize. Okay,
you start to worry.
Yeah, you start to worry.
Okay, so one of my questions. So why? I mean, case in point, this particular bank, Access Bank, CBN says you can't. You can't. You need to raise capital, or you can't pay dividend if 10%. If you have if your investment, foreign investment is more than 10% of your shareholders' fund. Why do they have that though?
I think it's trying to safeguard the bank and investor.
What's that math?
I would say, because
why 10%?
I don't know why 10%, but I think it's questioning the quality of the earnings and the quality of the reserves, which is an accumulation of historical earnings, I would say, and making sure there's enough capital in case there's a shock. Is the other thing as well.
So it speaks to capital adequacy ratio. Is that what it is?
Yeah, I think so, because I think the bank in question is one that has gone on a different strategy, and I think
because I'm really getting punished for global expansion.
I think what's happening is that an adult in the room is saying, okay, consolidate. Consolidate.
You're having all this. You're having this.
You have a lot of toys.
Yeah.
Play with this field now.
Ration.
And
let's see some efficiency.
You've not played with all these ones for a long time. Take it away.
Yeah, let's see what you can do with this.
Yeah. So is this a message to shareholders that, you know what, you really need to get more involved in some of all this? Some of the sort of decision making that management does, whether it's in terms of expansion or whether it's in terms of growing your loan book and all that. Are shareholders docile? And shareholders include some of you guys.
But let's not make expansion. Let's not make expansion the enemy.
Right.
Expansion is good. At least for some companies, for some banks, right? EcoBank's expansion footprint has been significantly profitable for the bank.
Think?
So maybe not here, but
exactly
outside,
maybe, but here I understand that here is a bit of a challenge for them.
So outside has been significantly good. So I think for themselves, it looks as if they might just scrap Nigeria and just focus on the rest of the. You know, who knows? They are really the Pan-African bank. But the thing is, expansion is not the enemy. It's the fact that you're able to still hold the operations here and then expand. That is the question. And
which is my point. So that's why I said, are we punishing expansion essentially?
No, I think
it's why I said maybe CBN is saying, you know what, it's fine to expand, like your point. but you know what? There's a point where you have to
show numbers.
Be
show
responsible.
numbers, responsible,
Yeah.
And then,
Generate
which
a
is why I
return.
said maybe shareholders probably have a lot more to say because, which is one thing we don't really get a lot here. Look, there's not a lot of shareholder activism, right?
Yeah.
Where shareholders are like, you know what? You've got to, maybe slow down, like, build shareholder value and blah, blah. Do we see a reset down the road where shareholders are a lot more involved now? Questions are tougher.
I don't think so.
And I'm not talking about banking, I'm talking in general.
Yeah.
Anyways.
I don't think so because
Another example as well. Sorry, but another example just to aid your response. We were here when a lot of companies were borrowing FX, and I think anybody who discerned better would have known that you're going to take a whammy when there's massive
And they
devaluation.
chopped in.
And they did. And where were shareholders when all this were happening?
So some of the companies we mentioned earlier, if you look at the shareholder structure, there's still a huge concentration of one or two individuals in
Founders.
those and the founders. There's only so much shareholder,
For banks,
revolt you
I
can
don't know
get
any
in some of
any
these
bank,
institutions.
any single shareholder in a bank that owns more than 30%. I don't know.
Yeah, maybe not, but he's saying one or two, so it's still like a
There is
closed system of like
There is
3-4
none
people.
that owns more than 30%.
So I think institutional capital, and you're right. Institutional capital needs to sort of step into play here,
Yeah.
right? Because when you look at how much institutional capital owns as a percentage of some of these companies,
It's
are
fractions.
they there's no requirement of board seats because there's if the asset managers came together and decided to appoint a representative, what does that? What's it called in Germany? Your labor force appoints someone to sit on the board. So is that something that we can replicate? Because ideally, it's all part of corporate governance, right? People that are,
And it's a good look too.
it's like when you look at foreign investors, they will look at that and say,
Yeah,
You are-
this makes sense.
Yeah.
some kind of balance here
Yeah,
when it
something
comes
that
to
you're
decision
doing.
making.
yeah.
Somebody to speak for the people.
Exactly.
All right, guys.
Power to
One
the
other
people.
company that I continue to track, or at least we continue to track on Drinks and Max is MTN. More than double their Q1 earnings last year, 560 billion. I mean, as much as an MTN story, but it's more of a Nigerian story. Are we gobbling data that much?
Yeah,
Like,
so
is data that more important?
and I'm even confused right now. I don't even know where it's going
Yeah,
to.
because data, people looks like people will probably eat data than eat food.
So I remember when
But for you to order food sometimes, you need it.
No. See, I'm at the gym. And this is my favorite pastime, honestly, is listening to the average Nigerian in their habitat and just gist. Right, I love doing it. So I'm just getting to the gym, and there's I drive myself. So everybody, they've come with their drivers, they've jumped into so I'm there, and then drivers are speaking, and then one goes, I feel no ito, but you see data for my phone. I say data. I'm listening to the guy, and the guy he's now explaining to everybody else there, because all of them are now listening to him. He's not telling them why data is important. He's not telling them that, see, in case anything happen, I feel call somebody for WhatsApp. He kept going about the data, and
send those long voice notes.
I looked at the crew he was talking to, maybe like 7-8 other drivers. All of them are nodding, like,
They agree.
this guy.
Yeah.
This guy is but I think he had been borrowing also. So that was another part of the story. But the general context is that it's not just you and I that are consuming a lot of data. This is now a nationwide. Almost anybody that has a feature phone is consuming a larger amount of data just because they are content creators. Everybody's now trying to do content. People know that they can get paid off Twitch, TikTok, Snapchat, and all these things. So everybody is consuming a larger amount of data. People are streaming on a regular basis. That is now consuming a lot of data. People are watching those streaming services. That is consuming more data. So there's a large amount of data being consumed. And I think it's only going to expand because I don't think any of us in this room follow any streaming service. Like we just stream something. No, we don't, right? So we don't. But I suspect somebody is going to create some sort of content that we might be interested in. Enough to want to stream. So it is getting there.
So does it mean MTN has a moat?
Yes, sir.
Because I don't know who can come in there and compete with them and disrupt them. I mean, if they have in fact, but follow up, because if they do have a moat, then does it get to a point where maybe MTN is to be broken up, like too much control? Like if they were in the US, would they?
60%.
If they were in the US, in the US, would they see them as like?
First of all, we are not US.
Yeah,
I'm just saying. First of all, do they have a moat?
Yes,
They do. They're an industry leader.
Airtel is good, strong as well. Data.
Yeah. Airtel
you have other ones. You have Fiber One. You have Starlink. You have all this other guy.
But not 60% market share.
60% market share. And not the investments in
so 60% market share in moat.
The data center thing.
Yeah.
Trying to tap into that AI thing that they're doing. So from even future-proofing their revenues, you can already see that thinking.
They're already a $10 billion company in Nigeria, though. Damn.
Exactly, right? And it also says something, right? So that the mass market, that's where you make your killing in this country, right? Once you're able to service the mass market, you can create that ring fence around your business and you can grow. So MTN is...
This thing you have said, flesh and blood did not reveal it to you. I have been saying this repeatedly. I've been saying, and it shocks me how the average Nigerian doesn't fully understand this. MTN has grown on the back of this. Money Point has grown on the back of this. OPay has grown on the back of this. Dangote.
And Awaba is about to grow on the back of this.
We are seeing companies doing it repeatedly, but still somehow, we all want to sell luxury.
Yeah.
It's confusing, but it's a story for another day.
Ayodeji, you want to say something?
No, I was just going to say it's going to be very difficult to justify the breakup of MTN because there are other sectors
I'm just saying.
where there's those strong monopolies as well. In cement, there's that strong monopoly as well. I think
Cement
banking
has
is
that
the
as well,
one. Yeah, I think banking is probably the one where there's not that strong of a monopoly there.
Yeah. And that's because they were incumbents who took charge. This one is MTN. One of the things MTN has is the sunk cost. So how do you compete?
Yeah.
And what's also interesting is that data is cheap in Nigeria, though.
Yes, it is.
I mean, like, you won't believe that until you
go outside.
Here, pound for pound is expensive here. But if you go out, you realize that.
Yeah.
Because to get unlimited data, for example, in the US can cost you as much as $50.
Yeah.
In the UK, maybe you're probably looking at
40
£20.
Yeah.
Exactly.
£20.
Or 40 quid, something like that.
In Nigeria,
$50,
3
it's not
months.
like 70K. That will last you like
Nigeria's unlimited 3 months is 75,000.
Yeah, I could do just that. Our own FUP is a bit different from what it is elsewhere. Like FUP, you just be dragging. You can't download stuff with FUP, but
if you do unlimited, and unfortunately, it's the data problem. So you have to have one network, another network, then the fiber that goes into your estate. So you have like 3, 4.
So there's still reliability issues.
So bottom line is that like it's a company that is difficult to bet against.
Yeah.
And again, it's like,
So is it the Apple of Nigeria or the Nvidia of Nigeria or the Microsoft of Nigeria?
it's like the
That's a good question.
It's very
it's like the
good, right?
Walmart of Nigeria.
Walmart.
Walmart
Yeah,
of
yeah.
It's
Because
staple.
They
Staple, huh?
Yeah, it's a staple, yeah.
They literally went from negative equity.
Within 2
18
years.
months, 18
I remember
months.
Sam saying here that these guys are going to get out of it.
Yeah, 18 months. That's and not just to like
Without raising capital.
+1. No, it's like to +1 trillion.
Without raising
So I
capital.
think the only
Without
issue
raising capital.
MTN has had over the last decade is maybe government.
Yes,
Yeah, that's
probably
yes.
the only
The
issue,
last
the
goal.
only headwind.
Yeah.
They've managed to waver through everything, even the FX issues in the crisis.
Yeah,
they've
they've
done
been
well.
able to.
When government came in with that whole, I think it was a tax issue.
Yeah, the tax issue, capital gains.
Yeah, that was the biggest issue for them.
Yeah.
Was it the tax or the penalty and all that?
And it's the
Yeah,
capital
yeah.
gains. It's the penalty on capital gains that they took it out illegally and da. It kind of distracted them for a while because they were just focused on that conversation. But now that everything has settled down, they've been able to power on. It's such a phenomenal company.
All right, phenomenal company, phenomenal drinks and mics today. It's been a very, very interesting drinks and mics. Touched on several topics. I hope you guys enjoyed. For those who are saying you guys shout over each other, we tried as much as possible to keep this very civil. All right,
We didn't drink a lot today.
Yeah, so
because I
we're-
always tell them whenever I
we
see them.
just try as much as possible to keep things very civil.
And plus 2 people are not drinking. So
Yeah, so
next time.
but
Next time, exactly.
It's been a very instructive session. Thank you all so much for being on the show today. Of course, we're going to go to buy, sell, or hold. But buy, sell, or hold is going to be for strictly our members, right? We're going to do buy, sell, or hold. So if you are a D&M member, then you would be getting the buy, sell, or hold section pretty soon so you can watch. But for all of us that are floor members, like me, Tunji, and I, this is where it ends for us. Thank you all so much for being on Drinks and Mics. Yes, now we're floor members of Drinks and Mics. Are you a member?
I remember.
Okay, fantastic. I am too, by the way. I was just kidding. All right, thanks, Gbolade and Ayodeji for being on the show. You guys are fantastic. For me, it's a buy. I hope we're going to have you guys back.
Yes. Bye.
Strong buy. Really appreciate you guys on the show today. All right, guys. Let's see. What do you think on the comment section? Do you think that MTN has a strong moat? Do you think as well that what's the cost of jollof rice? Pot of jollof rice in your house? Is it 30K as SBM Intelligence puts it, or is it cheaper than that? And what do you think about Nigeria's debt? Do you think that we are over borrowing? And then, of course, what else did we talk about? We talked about that GDP number. Do you think that we should be looking at GDP's growth rate from $8 terms? Or do you think maybe they just misquoted the Minister of Finance? Who knows? Maybe by this time tomorrow, he'll probably tell us it's fake news. I mean, because you never know. But it was on his
better be, because I'm confused.
Maybe he was misquoted. But maybe you guys can explain to us what he actually meant. We're all getting educated.
Yes, I will appreciate it.
Yeah, we really want to know about it. Right.
I'm the king.
Yes. Of course, June 5th, 2026, Nairametrics Capital Market Awards second edition is happening. So watch out for that. It's going to be another amazing award night. We're giving an award to people who have made this capital market what it is so far today. Thank you all so much for being a part of the show. Until we do this again next time, do have a profitable week ahead. Peace.